有一个声音吗？ Good evening from Beijing. I'm Kate Kui. We continue our 2022 Economic Prospects series today, live on CGTN. Our guest today is Charles Li, former chief executive of the Hong Kong Stock Exchange. Charles has greatly contributed to the reforms and globalization of the stock exchange during his term. He has promoted reforms of listing rules, and under the new listing regime, the exchange permits the listing of biotech issuers that do not meet any of the main board financial eligibility tests, listings of company with weight voting rights structures, and establishes a new concessionary secondary listing route for Greater China and international companies that wish to do secondary listings in Hong Kong. Looking back, all these measures have a profound and positive impact for global issuers and the Chinese economy. It has opened the doors for Chinese companies listed in the U.S. to return home and promoted healthcare sector companies in a time when they're most needed. After leaving Hong Kong Stock Exchange, Charles co-founded MicroConnect, a company aiming to provide financing to small enterprises with innovative business models. As we embark on the new year of 2022, we are very honored to have Charles Li joining us today to share with us his insights into the world economy. Charles, it has been a while. Good to have you today.
Thank you very much for having me. Great to see you guys again.
Right. Charles, I know that you founded this MicroConnect business after you left Hong Kong Stock Exchange. So before I ask you all those other questions, can you just briefly walk us through this MicroConnect business model and what kind of critical problems and questions you want to resolve through this innovative model?
Thank you. Yes, it's very hard to describe that problem briefly, but I will try. We're trying to bridge global capital with the small and micro businesses of China, essentially entrepreneurs who work for a living. This is really retail shops, restaurants, and services. Service providers, literally the grassroots economy of China.
Right.
And we firmly believe that there is a blue ocean of investment opportunities there that is not currently available anywhere, in any shape and form, principally because, the efforts involved in investigating in them and
Right.
investing in them and the risks are quite high. If you don't know them, if you don't know how to do it, if it's all have to be done individually. I think there's now a transformative opportunity right in front of us now because of the massive digitalization of China, being a completely cashless society, that we are able to essentially determine the digital revenue, and we are able to see very clear visibility of digital revenue of all the little guys that we're trying to invest.
Right.
And this is really a new way of investing in them with three key dimensions. One, unlike all the P2P financing, internet financing that we've been hearing for the last decade, we have to change from a credit product perspective to an investment product, meaning that this has to be permanent capital for the little guy and has to be with the little guy, thick and thin.
Right.
Number one. Number two, it needs to be digitally executed. We can't really do traditional equity investment. It's very, very difficult. And then lastly, you really need to find a way to progressively allocate to them through a system where you can have daily collection of your returns.
Right.
And this, a lot of details goes into it, but ultimately it's a 5D, way of investment: digitalized, data-enabled, daily recovered, diversified, distributed investment paradigm. And it's very exciting.
Right. Well, according to what you just said, apparently there are several existing problems that you're trying to tackle. One is basically the efficiency of current capital markets to cater to the needs of those micro enterprises for funding purpose. And then secondly is basically the trust issue and the mechanism to verify those credit system of those micro companies. And tertiary, I think digital platform nowadays can probably resolve the issue of fraud, of all those kind of monetary liquidity flow issue. But there are certain dilemmas as far as I can understand. Okay, you're funding those small guys, and then you want a digital platform to support those small guys. But those guys are not big enough to afford a digital platform. How can we resolve this problem? This is one thing. And then secondly, I would assume that you probably will need a bigger platform to host and to verify all those small guys' credibility for you. Wouldn't that be easier than you just do it all on yourself?
Yes, I think, what essentially financial services, Wall Street, what is Wall Street? Wall Street basically does two things. One, information integrity, so that investors who are strangers can investing in companies that they don't know. You need to have a body of information. That's why all the professionals in Wall Street is all about information integrity.
Right.
The second element of Wall Street is execution delivery. That's all the exchanges, clearinghouses, and CCPs operate to provide the trusted environment for execution to take place. As a result, it's very expensive, and it's highly engaged, which means that the companies that ever get listed globally anywhere have to be big companies. Hong Kong Exchange, after many, many years, have 2,000 companies. New York has about 5,000 companies, and China has 3,000 companies. So we're talking about 10,000 companies globally, maybe. But in the end, there are tens of millions of little guys. So we need to find a way to create an information integrity and execution delivery system on a completely distributed level. So you need to, it's not a blockchain per se, but we're creating a MicroConnect chain, which is not a blockchain, but it is a chain of the event that recording digitally every step we're taking so that we can modularize the way where information is collected. But we're not really doing due diligence. We're not doing fraud detections because for small investment, like 500,000 RMB each piece, we need to do tens of millions of them over time. And there's no way economically you're able to do it the traditional way. So our investment product is digitally executed every day, meaning has to go through we are only investing in small little guys whose revenue goes through an interceptor. That is that we have to be able to collect a portion of the revenue every day through a third-party interceptor, what we call a CC partners, connect and collect partners. And that only with that digital collection of our returns every day that we recover incrementally the capital we invested. That's the only way to do it. You can't really say, oh, let's do books later. Oh, let's do registration later first. Or let's do due diligence. For little guys of that scale, there's nothing you can do other than predetermining the product by working with the partners, and then distribute the product and collect your returns and risk manage your returns every day by collecting as a percentage of revenue. We do not get involved in anything. So we're picking stores vis-a-vis capital market picking stocks.
That makes sense. But how can we avoid those garbage in, garbage out data issue? How can you make sure the sanity of the data?
Yeah, we are not really, the data we're talking about is not, we're going to look at a bunch of data making a decision to invest.
Revenue data, for instance.
The revenue is not the data, is the actual collection. I'm not saying that we make an investment because we believe the data presented to us is correct. We actually don't believe anything. We simply make an investment initially, and by best educate ourselves with the allocation, we work with partners with a small scale investment first. But as soon as we make investment, we are collecting our revenues every day. So when I talk about data, I'm talking about every day I receive two things from every small investment. One, a portion of the incremental capital as a percentage of the revenue. So it's not the revenue data that I'm relying on. It is the actual revenue that I'm collecting every day. That is the data that I'm disclosing to my investors as to how I got money from that guy every single day. And then the second thing we get every day is some insight as to how that little shop is doing on that day. And that gives us insight so the next round of allocation that we will avoid the shops that seems to be problematic and focusing on the shops that are giving us already strong returns. So it's an iterated process that ultimately optimizing learning and investment.
Right. Can you please share with us the progress of this business so far since the establishment?
Yeah, we obviously, this is still early. We're just barely a year old. I retired about this time last year. But we have a 100,000, 10,000 plan, meaning 100,000,000.
Right.
So we're making our first 100 as we speak.
Cool.
I think we'll be done by Chinese New Year. We will have made 100 investment. We're hoping to make 2,000 investment this year.
Right.
And we hope to be breaching 10,000.
Right.
And we probably will need to, make 20, 30,000 investment, maintaining 30,000 investment to break even conservatively, very conservatively. But our target is to make 3, 4, 5 million investments as the AUM under the platform. So essentially, that's the only way for us to really scale this up to make it work.
Right. I think that's actually very meaningful, and I'm very glad to hear the progress that you are making, because those small to medium-sized enterprises are always facing the difficulties of funding from the capital markets and other channels. How would you comment on the Beijing Stock Exchange, the recent opening of Beijing Stock Exchange? I think they're also aiming to try to resolve this kind of funding problem for small enterprises.
Well, actually, all exchanges, organized exchanges, or any traditional financing that we are seeing, even though when they talk about small companies, in our mind, they're huge companies, because at least they're the company who can afford lawyers, accountants, and the regulators and exchanges, and to be able to get listed. So they need to be large enough to really be able to do that, because at least their books are prepared by professionals. So I think all the exchanges, including Beijing Exchange, the company listed there are by definition are in the thousands at most. So they're already big and established enough. Our universe is a lot smaller. We're in the millions and tens of millions. But I do think Beijing Exchange, if they are able to find a differentiated way of positioning themselves, it's a very, it's a big aspiration by the Beijing government. I think they have wanted to have the third exchange in Beijing for a couple of decades now. So I'm very glad that finally are able to secure this, and that hopefully create a differentiation, among the few domestic exchanges, and that they can find their respective footing and differentiation. But in the end, they are still solving, businesses, solving issues and financing issues for companies who are either already big or who are small but who can grow into huge companies.
Right.
Our companies that we invest in will never be big enough. Essentially the VCs, when they make investment, they are investing in things that ultimately can become massive, trees. And, for Beijing Exchange or Shenzhen Exchange, when they have all this technology company listed there, some of them are very small at the beginning, but they could all grow into huge trees.
Right.
The business that we try to fund are just normal mom and pop shops that will never really grow into massive trees. They just be very healthy, bring great returns, but then they have a natural shorter cycle of life. And we just travel as long as we can with them until the next cycle comes in, and we just continue to pick the store. It's a very different business.
So for your business, the MicroConnect, what is your targeted return?
Our targeted return, our solid underlying return, obviously, the current, you look at it as anywhere between 12 to 15%. But that's really cash flow. That's really recovering cash flow every day. So unlike traditional investment, you make an investment, you'll wait until one day it will do an IPO or will do some sort of M&A, and then you take an exit. Our investment, we're investing in the opening of one shop. And then as soon as the shop is operating, we start to take our money back. So our exiting from our investments start from the day the shop become operational. So it's just an incremental exiting every day until we recover our capital, get our returns. But the moment that we're taking any dollar back, that get redeployed back into other small little guys right away. So the efficiency of recycling that capital is very high.
Right. Right. So you see, Charles, you're always an innovator, a reformer. You've done a lot of things in your terms where you're in Hong Kong Stock Exchange, including the biotech sector, listing rule change, Chapter 18, including the voting rights structure, so on and so forth. Now looking back, by the way, some of those rules are very meaningful, especially under the context of U.S.-China trade tension and relationship dynamics nowadays. You basically open the doors for all those U.S.-listed companies coming back to return to Hong Kong. Otherwise, they wouldn't even have the all those environment ready. So, looking back, how would you comment on your contribution or your work to the Hong Kong Stock Exchange?
We live at the time in interesting times. I didn't particularly see this coming necessarily as a certainty, but it is not difficult to project that things will become difficult, and Hong Kong being unique the way Hong Kong operate, we just need to find the right spot where we can solve problems when neither China nor U.S. All the companies find that they are able to solve their problems in any one of the situations where Hong Kong can provide that solution for everybody. So it is something, actually, there was a lot of consensus in Hong Kong, but there are obviously a lot of dissenting opinions as well. But in the end, I think it's just pulling everybody together and try hard enough and do it at a time when this is still doable. Because when the situation becomes deteriorated as the way it is today, it would have been too late for us to act now, and it's really going to cost Chinese economy and the world economy and investors dearly if we had not been ready. So I'm just glad that we were ready, and now we're playing a vital role in creating another home for many of these great, wonderful companies. But there's a lot more that still need to be done.
Right. You mentioned a very interesting point that we should get ready early. In Hong Kong, indeed, under your term that we did get ready for all those critical tasks that we didn't actually foresee at that time. During this year's World Economic Forum, our President Xi Jinping further mentioned the importance of multilateralism and for international financial institutions. How do you think Hong Kong should actually leverage its unique position to better do its job and play its role to further promote multilateralism in a global financial industry?
Yeah, I think the biggest opportunity and also equally the biggest challenge for Hong Kong is to actually make everybody, both in China and outside, feel that Hong Kong itself is multilateral. And because we need to make people feel that we are multilateral. And hopefully we make people think that we are multilateral. But ultimately, I just want to make sure that people actually believe that Hong Kong is multilateral. So being multilateral meaning that you need to be trusted by China,
right,
but you also need to be broadly embraced and accepted and considered to be peers by international community, particularly financial services community. And it is not easy, to sometimes maintain that position. It's really the sweet spot that we need to find, because there's always going to be, the U.S. has their own way of doing things. The China companies, China players sometimes fit in there, but many times do not fit very well there. And some of them is the problem of the U.S. system that is incompatible for the Chinese, or sometimes it's the Chinese who cannot get themselves, in shape to be in compliance there. Conversely, China have its own way of doing things, and the domestic market operates in its unique ways. And many of that works for Chinese market because of the massive retail dominant, investor base.
Right.
And there is a certain philosophy there. And Hong Kong is right in the middle. And sometimes it's easy to slide into laziness and slide into a comfort zone where, we sort of take some of the good things of the U.S. and some of the good things from China, but not really critically looking at the things that we sometimes need to be brave enough to take some things in the U.S. that we originally are not comfortable with.
Right.
because it's very easy to hide behind retail investors as a shield in order not to make ballsy moves that need it in order to really make this work.
Right.
But sometimes you also want to make sure that you do not create a wild, wild west where the Chinese regulators are becoming very nervous that somehow the Hong Kong market could come back and impact them, particularly with the prevalence of Stock Connect and Bond Connect. So how to find that right spot is a huge art, and it's a huge politically, a calculated risk that need to be taken. And I think a lot more of that need to happen, because it's very easy to slide into the comfort zone and then resulting in a situation where the Chinese who really want it to be different from the China way find Hong Kong too similar to China, or for a lot of the, the companies that, the China would not have any issues coming to Hong Kong, but if we are not careful, sometimes they could look too much of a Wild West, and then China will become very nervous.
Right.
So find that right balance requires a lot of wisdom and a lot of political courage.
I think that's very insightful. From my early investment banking days, since I was a junior investment banker, I was taught that Hong Kong is indeed an international market because global capital can come to this market. They fund global companies, even though it is domiciled in China. It belongs to China. So what you just said, if I may paraphrase, is that you wish Hong Kong, though as part of China, as Chinese boards, it should always stay international and allow more international capital to come in and become more globalized.
Absolutely.
Right. Interestingly, you made a lot of reforms to the Hong Kong board and then make it more dynamic. One of the questions that actually from your online fans, okay, since we actually posted this notice of the live interview, a lot of fans actually left message to me on our WeChat and Twitter accounts. One of the questions is from a CFO of a Hong Kong listed medical company in the biotech sector. She wants me to ask you in particular that Chapter 18A allowed biotech companies to get listed in Hong Kong. However, liquidity is always a constraint. How can we make it better?
Well, I think we need to look at this issue from two ways. One, if there are structural constraints as to how liquidity is challenged in Hong Kong, we need to work on it. But we need to identify the right reasons. Some people identify, a stamp duty as a key issue. We obviously see an increase in stamp duty rather than a decrease that a lot of market players wanted to have. And other people are talking about other, different regime that we could introduce to improve, in general, liquidity, particularly from market makers, quantitative funds. And I think it's a separate issue. That's an issue that we will all need to, I think Hong Kong has progressively make it easier for a lot of those additional liquidities that typically in the past have not been active in Hong Kong, that has becoming more active, particularly quant funds and market makers. But on liquidity, from a different perspective, people also need to have a better understanding of liquidity. Exactly because it's easier sometimes to jump to a conclusion that Hong Kong liquidity is not as good, because if you look at the liquidity statistics, it does look like there's a lot more in the U.S., but a lot more in the U.S. are not really related to issuers. A lot of the high frequency trading, a lot of the, those are not really liquidity that can be tapped into by issuers. So I think people need to be looking at liquidities when it matters for issuer or for companies is really, are you able to get your IPO done?
Right.
Number one. Number two, when you need to raise your second, placement, secondary market offering, are you able to get those add-on deals done? Mm-hmm. I think decisively Hong Kong has shown that those deals, the IPOs can be done, even though some of the IPOs may have difficulty in getting done in the US, so they got done in Hong Kong, and many of the IPOs very quickly have add-ons. So from those liquidity that truly matters for issuers, I sometimes do not necessarily agree that Hong Kong is not a great market for issuers. It's just the numbers sometimes do not look very, strong. But there is another element, though, that the U.S. biotech market, it's a very structured market. It's a very much of, some people call it a cartel, which is probably more negative than its nature. But it is controlled by a group of very sophisticated analysts, but they have their own biases. If you fit into that bias, you'll have great liquidity because they support you. But if you don't happen to fit, if either your drug or your methodology or your milestone do not fit into their particular preferences, you sometimes have zero liquidity or zero chance of getting anything done. Whereas our market, the Hong Kong market, whether you call it a blessing or curse, depend on perspectives, that we have a lot more unsophisticated money that provide liquidity that actually are much more accessible. But those liquidities, ultimately, they need time to really learn because they can get burned if they do things that don't know really what they're doing. So we are just hoping that we are going into a good virtuous cycle where they learn, they make money, occasionally get burned, rather than get burned really badly and they never come back to the market. So we all need to be very careful there.
Right. I think, Hong Kong market is always catching up, always opening its mind and try to learn new things. I think that's good enough. Just while as we are talking, I noticed that yesterday the first SPAC filed its application to the Hong Kong Stock Exchange, which is also very encouraging news. What's your take on that?
Well, I think anything new is something that I would like to support because when you do new things, even if the new things may not turn out to be as good as you want it to be, it is a new opportunity for you to look at things differently. And SPAC in particular is one of those circumstances where you have to open your mind up. You have to really change the way you look at this. But obviously the Hong Kong SPAC market is quite different from the US SPAC market because the de-SPAC need to take place with the company that itself can be listed. So that begs the question as to why anybody would be doing a de-SPAC with a SPAC company if they are able to do an IPO. So people need to find that yes, I'm not trying to do a SPAC to avoid the IPO, but the SPAC can allow me to accelerate certain things in the IPO. So I think people will need a few deals for people to feel, is that proposition actually true? Is that hypothesis is valid? And either people find it's a great way of accessing the IPO market without a lot of the, and the bells and whistles and jumping through too many loops. And that turned out to be a very viable way of doing it. But the regulator has to feel that is not a way of avoiding otherwise legitimate regulatory inquiries and scrutiny.
I think that's fair enough. Let me ask you those broader macroeconomic questions. China released its 2021 economics data about a couple of days ago, several days ago. Q4, the GDP data is about 4%. So the growth rate is, little bit off, and people are worrying about the slowdown. Do you foresee such kind of risk? And most importantly, are we going to see the currency fluctuation that happened during 2014 to 2018 period? Will history repeat itself while U.S. is tapering off?
Those are big questions that I wish somebody could give me answers because that's burning issues on my mind as well. I don't really think anybody really know. We could look at the history, we can look at the past, but what we are dealing with here today, what we are facing today, especially in light of the U.S.-China relations, especially in light of all the pandemic, are so new that it's sometimes very, very difficult for people to draw conclusions from the past. But one thing, I think two things are clear. We will see some tremendously challenging times ahead. Two, very difficult to project exactly how those challenges are going to play themselves out. Because China's economy today is very resilient in a lot of dimensions, has tremendous, hugely successful private sectors that are not sometimes fully captured in the official statistics, and also are not as susceptible to macro and monetary or other policy changes. Or it's very hard to determine exactly what's the causal relationship. If you take policy A, what is it going to do? I think we generally know if you take a policy A, what is going to do for monetary policy for the banks, what it's going to do for some of the big ISOEs, what it's going to do to commodity, what's going to do for energy. But sometimes it's harder to determine what it's going to do to many of the service-oriented private, economies in China today. Sometimes, it hurts, sometimes it better, sometimes it creates other opportunities. So I just think the Chinese economy today is so much more diverse, is so much more resilient, but certain sectors are also aggregating so much of the risk, particularly in poverty, that ultimately have a lot to do with the banking system. And so I have said a lot without saying much, because, I really don't know, anybody knows how this is going to work out. So I do see huge problems coming up, knockdown effect from the tightening of the sector and the busting of the property excesses, and their automatic conclusions people are making by looking at past experiences. And I would argue that it could actually surprise us on upside and both on downside as well.
Right.
But I do think in the end, it is the private economy that is providing such a better absorbing, base for any shocks that we could see, that I just think, I'm personally still optimistic that it's so resilient and the Chinese people are so liberated, at least at the grassroots level. There's a lot of constraint and regulatory pressure at the very top, but I don't think that's necessarily that common prosperity pressure at the top has translated into anything other than reasonably positive energy at the mid and to a lower level. So I'm personally quite optimistic.
Right.
I wouldn't say optimistic. I'm not pessimistic. And I'm cautiously optimistic.
Right, cautiously optimistic is the word. You mentioned property sector. Actually, not only property sector, technology sector currently is also being clamped down by the government regulations, especially on the data side. What is your take on that? Especially, you are one of those people open the doors to those technology companies and welcome from the U.S. markets. I honestly want to hear your insight on that. Do you think government is actually regulating too tightly on the data side and then try to, not really protecting the entrepreneurship to a certain extent? That is actually a huge debate nowadays. Do you think it's overdone? As a matter of fact, it's actually killing innovation to a certain extent.
I think I can certainly see that side of the argument. But I do not believe that if indeed it may have some of that impact, I don't believe it is the intention, and I don't believe that's part of the plan. And if it is actually creating the knock-on effect that is creating unintended consequences, I'm sure, and I would appeal, and I'm sure regulators will, make sure that those unintended consequences do not become too much of a reality. Right. I don't really think the regulatory crackdown, whatever descriptions you want to make for it, is actually about technology. It's not. It's actually about some of the outcomes of the technology innovation that has created, and whether or not those outcomes could generate or could degenerate into excesses that ultimately is actually going to suffocate technology and suffocate innovation. I don't think there was any target against innovation. Even on data regulation, if you look at the data regulation, I still think they're all very vague and generic, simply because the data industry itself is still in its very early stage of explosive growth right now.
Right.
And exactly how data is going to work and how it is going to really be used or potentially be abused, there's a lot of questions. So I think the regulation today simply only put down a marker to say the day where you think you can do anything you wanted with the data is over.
Right.
But they haven't figured out exactly to tell you what you cannot do with the data. And I think what happens is that some of the, the bluntness of the regulation is more about, I don't know what to tell you, but until I know, you're not able to do anything yet, or don't do anything, too, funky. So I think on that part is the uncertainty. It is the absence of answers that sometimes make people pause. But I don't think anybody is stopping getting data,
right.
because we all know that data is important. It's almost like a land. The fact that sometimes the government says, okay, you cannot build, residential or commercial houses on rural land, and creating huge uncertainties if you already have a piece of land and you build something on it.
Right.
But that kind of fear or deterrent or potential future crackdown is never going to, is never going to constrain people. If I can get land, I will get land, and I figure out what to do with it later. But the problem today is I'm not going to pay too crazily for a piece of land for which I don't know how I'm going to use it for yet.
Right.
In the past, if you assume you can get a piece of land, you can do whatever you want with it, then you pay through your nose on it. I think those days are over. People are going to be reasonably figuring out what they could do, and they're not going to pay through the roof just assuming they can do whatever they want to do with the data.
Right.
But I don't think that regulation is stopping anybody from trying to get as much data onto that platform as possible.
Well,
it would be not wise to stop doing it.
Right. I think from my perspective, dialoguing with entrepreneurs and also policymakers, I would actually assume this is an ongoing problem that the government is also trying to tackle. It's a new problem for them as well. We've never seen so many big tech companies before with so much data, so many data. So they don't know how to regulate it. But by no means the government want to shut them down, because this is an innovative business creating huge value to the society. Charles, let me ask you one thing. You are a CPPCC member. So what is your proposal this year?
I'm still thinking about it. And actually, my assistant today asked me about it. I would imagine I will probably stay in areas where I'm reasonably familiar with. Last year, I basically pretty much focused on MicroConnect, kind of a small businesses. I don't know about it today. In the absence of some brilliant ideas coming up, I probably stay, and where I feel comfortable and competent, because it's not about novelties of the idea. Sure. It is about as well practicalities and whether or not you actually know what you're doing, rather than throw up some interesting fancy ideas that nobody know what to do with. And sometimes I like to figure out, a more practical side of it. I don't know yet, so the answer.
Great. So when you know, please let us know, and it would be great to share your great proposal. So thank you very much, Charles, for your time today. That is Charles Li, a former chief executive of Hong Kong Stock Exchange and also co-founder of MicroConnect. These are the dialogues with Charles for the past 1 hour, and he shared with us his insights on the global capital markets, all the reform actions on the Hong Kong Stock Exchange, Hong Kong markets, and also his outlook of the world economy. Tomorrow, we're going to continue our 2022 World Economic Prospects series, and we're going to dialogue with Fan Gang, a renowned economist. Stay tuned.